In June 2024, pharmacy chain Walgreens made a shocking announcement.
They plan to close a significant number of stores. At this point, only 75% of stores bring in what is effectively their revenues and profits.
The iconic chain is rapidly reducing its footprint, with approximately 2,150 locations on the chopping block by 2027. This is just the latest effort by the struggling company to right a ship that has seen a rotating door of CEOs, stagnating profits, and its share price fall more than 55% between January and July 2024. In the Q3 report, CEO Tim Wentworth cited two reasons: pressure on the consumer and challenging trends in the pharmacy space.
They don't have infinite time to stabilize this before it's too late.
But Walgreens' problems are just the latest sign of trouble for the entire industry.
CVS has been closing stores all along.
Rite Aid is filing for bankruptcy.
So what is happening to American pharmacy chains? How did Walgreens go from record highs to a bottoming stock price in just under a decade? And what does all of this mean for you? In order to better understand the headwinds facing chain pharmacies, we have to separate the store into two parts. First, there's front of store, or retail. You know, your over-the-counter cough medicine, paper towels, makeup, candy bars, that kind of stuff. Then there's back of store, or pharmacy. We'll get to that later. First, let's start where everyone starts, walking in the front door.
Walgreens of today looks very much the same as the Walgreens of yesterday. It hasn't really evolved and adapted.
When it comes to retail, Walgreens is in the midst of a downward slide, seeing a 4% year-over-year decline in Q3, a continuation of a rough few years for its retail segment.
The front of store offer, where the general merchandise is, the beauty products, isn't that good. It often doesn't look very good. The brands that they have aren't very interesting. The prices are often much higher than other destinations. And a lot of people will think, well, yes, I'm here, but why bother paying over the odds?
Every couple of years I hear, here's our new plan for the front end. And it's always some new gimmick and then that doesn't work, and then they don't talk about it anymore.
As inflation squeezes customers, chain pharmacies are struggling to compete with cheaper alternatives, like dollar stores and big box retailers, who offer larger selections and have their own in-house pharmacies.
Particularly our consumer is definitely pressed both from, the ongoing inflation that we've seen, albeit it's somewhat moderating, as well as the amount of money that they just have as we move forward.
Now, Walgreens realizes this is an issue and recently announced plans to lower cost on 1,300 front-of-store items. But it might be too little too late, because it's not just the economy that's changed, but the way we shop.
Anybody with a pulse would know what's happening with front end, which is, they're in a pincer movement with Amazon and Walmart getting better and better. They have better price points. The delivery options are getting, quicker and quicker.
Another frequent pain point for retailers, shrinkage or loss of merchandise, often due to damage or theft. In an interview with the Wall Street Journal, CEO Tim Wentworth cited high theft locations as a factor in determining which stores would be closing.
Store experience has deteriorated with employee cutbacks and with shoplifting in some locations, as you know, locking the Gillette razors behind the case.
The problem is anti-theft measures aren't popular, as locking necessities behind glass cases doesn't just deter thieves, but it drives away paying customers.
Locking things away behind cabinets is the biggest advertisement for Amazon that you could possibly make, because it just says to the customer, this is a really hard place to shop.
And that's just the headwinds up front.
8 million vaccines this year at the back of the store already. That's a healthcare business, right? That's not just putting pills in bottles.
When it comes to back-of-house operations, pharmacy and health services are Walgreens' largest source of income. In Q3 2024, pharmacy sales made up 76% of Walgreens' U.S. retail pharmacy revenue, and 60% of the company's revenue as a whole. But that's been a declining business for Walgreens, largely thanks to telehealth services and lower reimbursement rates for pharmacy benefit managers, or PBMs. PBM is a company that acts as an intermediary between your insurance and the pharmacy.
PBM started with the idea of being a claims processor. So when you bring a prescription to the pharmacy can bill the PBM.
The role of PBMs has since expanded beyond just facilitating reimbursements. They also negotiate drug prices with manufacturers, determine which drugs are covered, set copays, set prior authorization criteria, and decide which pharmacies a patient can go to.
And I think where the traditional PBM pricing model fell apart and where there's so much concern is that the entities are being paid to manage drug costs, but typically benefit when drug prices increase, and it creates a misaligned incentive.
The issue for pharmacies is PBMs have been shrinking the reimbursement rates and pushing patients towards generic brands over name brand, a move that helps the PBMs but makes it harder for pharmacies to make money. The FDA now estimates 91% of prescriptions written in the US are for generic brands.
Historically, pharmacies made more money on generic, less money on brands. Is that with the growth, particularly of the GLP-1s for diabetes, the brand volume has increased. And where pharmacies weren't making as much money on brands, as you increase that volume, it creates more and more pressure, reimbursement pressure on the pharmacies.
Currently, the 3 largest PBMs in the US are CVS Caremark, Cigna's Express Scripts, and United Health's Optum Rx. These 3 companies alone manage almost 80% of all US prescriptions. And yes, you heard that right. CVS owns its own PBM.
Caremark, which is owned by CVS and CVS stores, Caremark can set whatever rate it wants with itself, and it's just left pocket, right pocket. Whereas with Walgreens, they're just a straight up price taker.
However, the growth of PBMs has attracted federal attention, which is potentially good news for pharmacies, as the Federal Trade Commission recently announced it plans to sue the nation's 3 largest PBMs, accusing them of illegally driving up drug prices.
So I think anytime we can shine a light on that, put pressure on that to make sure that everyone knows what they're paying for and why they're paying for it. And so at the end of the day, people can afford the medications that they need.
And that's another thing. What's happening to all the people who need these pharmacies? What happens to communities who rely on these pharmacies once they're gone? Pharmacy closure can be detrimental, especially in areas where access is already an issue, creating something called pharmacy desert, or a place with low geographic access to pharmacies.
The definition of this depends on several things, like the density of the area and the resources of a neighborhood, including the median income of a neighborhood and how many, the vehicle ownership of that neighborhood.
According to the National Institutes of Health, approximately 15.8 million Americans live in a pharmacy desert. An NIH survey of census tracts identified over 4,600 pharmacy deserts in the US, with the majority being in urban areas.
There are neighborhoods in the south side of Chicago that do not have any pharmacies. In the downtown area, you might have a CVS next to a Walgreens, next to a Rite Aid. Those neighborhoods are wealthier, they're whiter, and there's just more resource than the neighborhoods that don't have pharmacies. So it's not even on average, there's just inequities in the distribution of pharmacy deserts.
Pharmacy closures predominantly affect low-income urban areas, where the majority of people are on Medicare or Medicaid, plans with lower reimbursement rates compared to private insurers.
If that is really a right sizing, they would be closing in the neighborhoods that have the most pharmacies, not the neighborhoods, the counties, including rural areas, that have fewer pharmacies on average.
Both CVS and Walgreens acknowledge pharmacy deserts are an issue and claim to be taking that into account when closing stores. Walgreens' CEO told investors, "We are the only thing standing between those places and being pharmacy deserts. And our goal is not simply to be the last one to leave. Our goal is actually to find new ways to work together." CVS CEO Karen Lynch also commented on this topic earlier this year.
And we are also committed to making sure that there's not pharmacy deserts, so we won't close stores where people need access to medication.
If it's a footprint, the argument, that doesn't make sense. Because we do have evidence of where they're closing, and it's not in the neighborhoods that have the most pharmacies.
Of course, pharmacies aren't just for picking up prescriptions. Chain pharmacies offer health clinics, COVID testing, vaccines. And it's not just the customers who are impacted. The pharmacists and nearby pharmacy staff who now have to shoulder the burden of displaced customers, all at a time where pharmacists are already staging walkouts and ringing alarm bells over insufficient staffing and corporate mandates. The problem is, the average American has almost no say on if a pharmacy stays open or closed in their area, meaning the solution largely falls on legislation to fix.
Regulating PBMs and potentially increasing reimbursement rates for pharmacies that are serving the most marginalized neighborhoods.
So that FTC lawsuit we mentioned earlier could actually lessen the impact of closures. And there's already been movement on the state level.
States obviously have a role. They can also regulate PBMs. They can also ensure that, for example, their Medicaid programs provide higher reimbursement rates for certain pharmacies.
In a statement to CNBC, Walgreens stressed, "We share a deep commitment to offering equitable access to healthcare in the communities we serve. our priority is to ensure a smooth transition for our customers and team members during that time. While painful for communities, from a business standpoint, closing low-performing locations is the solution to a lot of the issues these companies face. And we know it works because someone already did it.
11.3% same-store sales increase at the front of the store for the pharmacy. I mean, that's pretty impressive. What drives gains like that?
Part of it was that they just had greater volumes at the pharmacies. And I remember CVS has been closing stores all along. They expect to close up to 900 by the end of this year from where they were a couple of years ago.
Other attempts to cut costs include Walgreens pulling out of its primary care endeavor, VillageMD. In Walgreens' Q3 investor call, CEO Tim Wentworth gave investors ideas of where Walgreens is shifting its focus next: health, beauty, and women's health.
It certainly hasn't taken advantage of very strong areas of growth in the US, like premium beauty. It's allowed Ulta and Sephora and others to really eat up market share in that arena.
And less pharmacies also means better pricing power when it comes to negotiating with PBMs.
One light at the end of the tunnel is on the pharmacy reimbursement. Caremark, I mean, they have said, look, we recognize that what's going on in U.S. or the drug retail market is not sustainable. So Walgreens could get a new contract from Caremark in 2025.
Now, on the consumer level, there's been an unlikely trend emerging out of these pharmacy closures: a resurgence of independent pharmacies.
It's true that independents close. They close at a much higher rate, but it's actually a question of turnover. So they're more likely to open in rural areas, they're more likely to open in neighborhoods of color and low-income neighborhoods, because that's where chains aren't.
In New York City, less than 1% of the population now lives in a pharmacy desert, a city where, as of 2023, only 15% of pharmacies were chains, meaning the mom-and-pop businesses that were run out by the chain pharmacies could be the solution when those same chains leave.
It definitely creates a business opportunity for an entrepreneur to come in, start their independent pharmacy, and service that area that needs it.